Hey everybody, it's Sandy Krestan with the Krestan team, and it is crazy. It is May, and I wanted to share with you a little bit about what the impact is of the rising mortgage rates on the housing market. And this is about April of 2022. And so a big thing with us is always we're going to talk about facts. We're not going to talk about fiction. And just know when you go to get resource information, you want to make sure that you don't go get it from just anybody. Don't listen to the news, because what sells on the news, it's fear and doubt, and get the facts. And so today we're going to share with you a little bit as we look back to April, and maybe even looking back a little bit further than that, because of course our past always leaves clues. So a lot of questions I'm getting right now is, why is this just like 2007? And so I wanted to kind of share why this appears to not be like 2007. And I want to talk about the people that are buying, the types of loans that we've done, and then also some unemployment numbers. And so what we're looking at now when we talk about people buying is, because of what happened with COVID, there are people now that can work from anywhere in the country, not just next to where their corporate headquarters are. So we're getting people moving here to Arizona a lot that can now work from anywhere, and they want to be in a state where it's sunny 330 days a year, right? So why they're buying can make a difference. And then also the types of loans that have been doing. And in 2007, keeping in mind, I've been doing mortgages since 1984. There was loans out there that we kind of teased where we said, hey, fog and mirror, you could get a mortgage. People were getting 580 credit scores, getting 100% financing, sometimes over 100% financing. Those loans were never going to turn out good. People with 460 credit scores, stated income loans for self-employed, and you didn't have to prove where your income was coming from. So those loans had a higher percentage of going bad, i.e. short sales, foreclosures. And then the unemployment numbers. Our unemployment is at a 52-year low. People are working, and we didn't have that in 2007. So things happen to good people, bad things, and there always will be some portion of foreclosures or short sales. But right now, as of right this second, it's 2007 and 2022, they don't seem to be translating to the same. The other thing is I wanted to share with you is fact, right? Not fiction. Is take a look at this chart, and you will see on average a normal distressed property sale percentage is about 4%. And you'll see that now we're trending way below that. So distressed sales from 2022 in February were less than 1%. So just keep in mind, we will watch that for you. We get a monthly report. So if you ever have any questions about that, we'd love to answer it for you. So I just want to remind everybody, one of the reasons that we ask every single client is, what's the payment you're going to feel comfortable with, is because it doesn't matter what I can really get you pre-approved for. It matters where you're going to feel comfortable, because I actually am in an office with a door that you could knock on, and I don't want you knocking on my door going, what did you help me get into, right? We want you to think about, look at your budget on the payment that you're going to feel comfortable with. And so in that realm of thinking, it's really less about the interest rate and more about the monthly payment that you're going to feel comfortable with. One of the great things I always tell my home buyers is, especially if they're first-time home buyers, or if their new mortgage payment is going to be higher than the old one, is we get you pre-approved earlier rather than later. So let's look at that monthly payment difference and have you start putting it away. And I want to know how that feels. Do you feel like you can still eat? Do you still feel comfortable to do the things that you guys want to do? We also will talk about any upcoming life event changes that we might know about. Are we going to start having babies, or possibly retire and downsize, or want to move to be by your future grandbabies? So there's a lot that goes into making sure that we're looking out for your best interests when it comes to the largest asset, your home, most times, and the largest debt. And we know we take that super seriously. So we moved to kind of looking at where we've been. And crazy enough, this chart actually goes even before I was in the mortgage business in 1984. So you'll see here that back in, it was 1972, rates were right at 7.5% for a 30-year fix. So I know that I bought my first house in 1989 at 10.5%, and hands down, that was a great rate. But I wanted to share with you, for 21 years straight, we have rates over 7.5%. And then we look at the next amount of time, at another 16 years, rates were over, for a 30-year fix, 5%. Yes, for a brief little moment in time, we had the lowest rates I've ever seen in 37 years. And everyone that got it, I'm super happy for you. But I need us not to look at that as being the time that was normal, right? We want to look at that as that was the abnormal time. And rates where they're at now more trend to be a normal market when we look at the history of mortgage rates. And remember, this is about fact, it's not about fiction. So I would love to share with you guys a quick look at mortgage interest rates and recession times that we've had in our country. So you'll see, yes, we had that lowest rate ever for that snap second in time. We then had, during a recession, rates were higher at 6%, and they moved down to the 4.875. And then at 2001, 2002, we had another small one. We were at 7.375. I was already here in Phoenix, and it did go lower to 6.75. And then again in the 80s, where it was up to 11%, you know, when I bought my first house, and it did go down to 8.75. And then that time in 1978 to 82, it was as high as 18%. And with a recession came down to 13%. Now we've only got 5 times since 1972 that when we've hit a recession, that rates have gone down. So again, this is the deputy chief economist for Freddie Mac, and I want us to embrace this. Mortgage rates are likely to continue to move higher throughout the balance of 2022. Of course, they're going to go higher because they were the lowest they've ever been in 37 years. Although the pace of rate increases will likely moderate, get a little slower. Much of the increase in the rates in the early 22 was the anticipation of what will happen later this year, especially with the Federal Reserve and the interest rate policy that they're carrying. Here's another one from the Director of Forecasting from the National Association of Realtors, NAR. And it says, I expect the 30-year fixed rate to continue to rise, although we aren't likely to see big jumps that occurred in the past few weeks. You know, pretty much since March 1st, we've increased rates by anywhere between 1 to 1.5%. And so I know it was a big shock because we have short-term memory of what we just had. But let's make sure that we're making a decision off of facts and not fiction. And here's the research we keep watching for, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market conditions continue to heat up. Every market is different. Every subdivision, every county, every state. So you have to look at what it is for where you're buying or where you're selling. It's very specific. And so here's a great new chart for April. There is more new listings, new active listings. Now, you know, 50, but they're more, right? So we're increasing a little bit as people, but the great thing is we're seeing a bunch of buyer traffic. So when you see that there's an increase in listings, that doesn't mean, oh my gosh, now prices are going to be coming down, right? It's just saying we had people sitting on the fence. It's increasing a little bit. Is it lower than it could have been last year? Sure. With the lowest rates I've ever seen in 37 years, or at least the lowest rates from what I know tracked in 1972, of course, right? So if we look at where you are in the country, our team is licensed in Illinois and Arizona. You know, we've got a very strong market. It's strong. when it comes to buyer traffic. I was working in open house with some agents, and I think we had 25 different groups through just this past weekend. So there's a lot of things you could do as a buyer to make sure, because it is still a competitive market, to make sure that you're going to be ready to go when that house comes in front of you, that the sky's open, the angels start singing, and this is the one. You've got to get completely pre-approved first, because it's not a pre-qualification where you just tell us what you make and we tell you what you think you can get approved for. We're literally pre-approving you. We're taking a full consultation. We're taking a full application. We're checking your income. We're getting all of the supporting documentation that will confirm the information you gave us. We are pre-underwriting your documentation, running an automated underwriting, putting my 37 years of experience to work for you, and getting a pre-approval. And if we've got it from you sooner rather than later, we're then taking the next step. We're submitting it into underwriting. So we will get a full-blown underwriter approval to put you in the best position possible. And if we've got the time to get you condition-free for that full underwriter approval, we're going to be able to offer you our cash, just like cash guarantee when you go to write an offer. So sooner is way better than later. And we can put you in the best position. And don't forget, we have a listing agent customer care program with the Krestan team that even kicks it up another notch. So buyer traffic strong, getting yourself pre-approved completely is absolutely. And here's the chief economist from Freddie Mac. With rates rising and expected to increase through 2023, it makes sense to obtain a purchase now. Here's my thing. If you rent, you pay a monthly amount. If you buy, you pay a monthly amount. But what you do get when you buy is the growth in appreciation of the home. You get the equity built by paying a principal and interest payment for that principal portion. So today, if you bought a $360,000 home in a very short 5 years, just based on increasing equity from appreciation, you're looking at that home in 5 years having a value of $456,000. So you're going to have equity through appreciation of $96,342. And what does that mean? What equity do you have when you rent? Zero, nothing. That equity through appreciation goes to your landlord. So the last one I want to give you is from the S&P is the 19.2% year-over-year change from January was the fourth largest reading in a 35-year history. Even if your home just appreciated 3 to 4% a year, you're going to get that 15%, right? That 20% of equity built through appreciation. It's huge. All the things you can't get when you are a renter. Those benefits go to your landlord, besides they get your monthly payment. So here's housing units for April. You'll see, other than the 4 years that we had through around 2005, where there was just record-setting numbers of units, of single-family housing units completed, we're looking at 14 years of almost a 50-year low of new home starts. So that's part of our supply and our demand, right? We've got less supply and there's a huge amount of demand with a bunch of millennials coming out, our first-time home buyers coming out, people wanting to move around the country because they can for their jobs. And so I want you to keep in mind, it's what we learned in high school and college with supply and demand. You know, if you've got a shortage of supply and demand is high, the supply is going to be more expensive. Home price forecast for 2022. This is absolutely even across the board. All of them are, even if we look at an average of all of them, 6.7% average for home price forecast increasing. You got to own, right? Now's the time to own. When's the best time to buy? Well, sure, it could have been 5 years ago, but the second best time to buy is right now before it goes up another 6.7%. So how much does the house you rent increase in value for you? Trick question. Nothing, right? It increases for your landlord. So another great tool that's out in April, showing across the country, right? Because we're a global economy, is the average days on market. Average days on market take into account all listings. So you're going to see that most of the country, average days on market is less than 30 days. Most markets around the country, you know, here in Arizona, we're like a 2-week supply of inventory, 3 weeks. So it's definitely still a seller's market. So check out where you are. And just know that while our team is licensed in Illinois and Arizona, we've got great fairway loan officers across the country that we can get you hooked up with a referral to make sure you're taken care of to how we love to get you taken care of. So existing home sales in April, this is from NAR. You're going to see that they are off the hook awesome. I mean, just look back to January of 2014. We're twice as many home sales. It's going to be an active market. They are projecting between 2022, 23, and 24 that we're going to have a lot of people getting in homes, right? That doesn't include refinances. This is just purely people getting into homes, buying. And then the change in home prices year over year. This is a composite of 20 cities. And you'll look at, you know, from January, 19%, record breaking. Literally last July, the composite was at 20. So very much increasing. Remember what we talked about, why this was in 2007 though, right? We've got demand. We have very, very low unemployment. We're not doing the fog the mirror kind of mortgages. You literally have to prove income. I know, take that in. Pretty crazy. So I want to give you just a quick wrap up. If you're thinking about stopping renting, give us a call. We can get you pre-approved fully upfront to put you in the best position to make your offer and then to get it accepted. My team and I are available. Absolutely. I am Sandy Krestan. I am so blessed to be in the top 1% of mortgage professionals in America, as well as we were just named for the second year in the top women in mortgage in the United States. And we're very honored and pleased. And if you have any questions about buying or selling, or if renting is right or if buying is right, just know you can get us anytime. My cell is 602-820-5166. Our BAT line hotline, where it rings to all three of us on the team, is 480-420-7107. Make sure to like, subscribe, follow, you know, send us smoke signals, text us, email, check us out online at thekrestanteam.com. And as always, we're going to put your best interest first. And thanks so much for taking the time to see this April snapshot. We are absolutely so excited about what your future holds and what we can do to help and just help make your best financial decisions.